Hi, I'm Colleen O'Connell-Campbell, wealth advisor at RBC Dominion Securities and host of the Cash Rich Exit podcast. I'm joined today by Tania Guido, an estate planning specialist with RBC Wealth Management Financial Services. Tania has over 30 years of experience in financial services and is known for a thoughtful, transparent approach to insurance planning, helping clients and their advisors, like me, make confident decisions around personal and corporate strategies. Listen, if a particularly important person disappears from your business, what's going to happen? What is the risk to your business? Today, we're unpacking key person planning in plain language and how it shows up for you in your business. But before we jump in, just a quick compliance note. This video is for general information and education only. It isn't legal, accounting, estate planning, tax, or insurance advice. Please review the full disclaimer that you'll hear later or see on the screen and speak to your professional advisors about anything specific to your situation. Okay, Tania, we're back. If you weren't here before, we've previously had a short video on the core fundamentals of insurance and risk. And we're going to take it up a notch today and talk about key person. And probably before we get into anything, we should really define what is a key person.
Absolutely.
Over to
Absolutely.
you.
So every business definitely has a key person, right? So whether that is one person or a few people, we have to think of it as, well, what if that person leaves? They become unavailable, injured, sick, or, passes away. Um, does the business or will the business lose revenue? Does that person's ability to be there bring more credibility to the business? Maybe it's on the operational side. So again, when we think of, founder-led type companies, that founder probably is that key person. They really hold the
Mhm.
ship together. They hold the relationships of those clients. They make critical decisions. And if they're not there, I think things could definitely look to fall apart. So again, I think it's understanding and really mapping out, well, who is really important to your business? What role do they play? And then think about it is if they are not there, how does that impact your business?
And so, myth or fact, key person insurance is only for really big companies.
Absolutely not. I mean, think about that for a second. Probably big companies have a lot of stuff organized, put together, governance are in place, processes are in place. One person doesn't just hold those relationships, maybe more people do, right? So I think that number one, I mean, key person risk comes in all shapes and sizes.
Right.
And so whether you're one person or whether it's again a 20 person company, there still are one or multiple, let's call them rainmakers within
Mhm.
that business, right? So again, I think that we have to be careful of not thinking about larger companies. And then, of course, certainly the small ones are really where we should certainly look at and focus on from this perspective.
So you've already alluded to it a little bit in the definition of what a key person is, but how might a business owner, CEO, founder, identify who in the business they may want to, uh, really uh, consider whether or not there's a place to buy some insurance to cover off should that person, have a situation where they're off, reasonably long term with something, an illness, or heaven forbid, become an angel before life expectancy. How might they be identified? I think that that's probably the first step before anything else, other than themselves as the founder or president or chief bottle washer.
Yeah.
How
Yeah.
else might they identify others?
So tough questions are a lot of the times how we determine who in this case, might that be the key person or key persons. So I would say, start with asking yourself, founder, CEO, business owner, who brings in certain revenues, who has deep client relationships, who has deep relationships with, again, vendors, or depending on what your business is, who has that core deep relationship with them. Um, Maybe it's on an operational side. Who is that person that is really good at that operational side of it? Whether it's in, you're thinking of, I don't know, a shop where you're producing a product, you're creating granite. Like, I don't know what that could be within your business, but that's really where it's like, who has that critical impact of operationals or making, those strategic decisions? And can those technical expertise or relationships be replaced, or are they hard to replace? Right? Can they shift to somebody else? And if they can't, is that going to create an impact on the business? So it's really just understanding who is within your group of people, determining, thinking about, well, what if they aren't here for a short period of time, or of course a long period of time? Does the business change? And again, it could be one, it could be two, it could be three people. It really depends on the type of business that you have.
Yeah. And so we're talking about key person and ensuring the risk of an illness or unexpectedly becoming an angel um, that could be covered through potentially an insurance product, which we can get into, and then allow the business to be able to find a replacement. We're clearly not talking about the key person risk from the perspective of you have a resignation, you have somebody moving on. That's a different type of risk, and you would need to go to different, you either need to have a strategy in place for like a pipeline that to fill that spot, or you may need to have that in tandem with also, having this type of insurance so that if the reason they've left is for a disability or because they've become an angel. But there is also this other risk that we can't address with insurance, right? I just thought you probably should make that clear that that's not what we're referring to.
Yeah, exactly. And I mean, I will just say on this part too, I mean, again, I think it's all dependent on how big your company is, but I have seen, where, you think about a group plan, right? Employers put together a group plan, whether they have a big or small company, so that that brings value to their employees. It allows them to want to work for the company. They have these group plans. And maybe that's what's keeping, obviously, over other things. But one of the things that's versus going somewhere else that doesn't have a group plan. So what I have seen is, again, for these key people, if they're really critical to your business, maybe there is a conversation about insurance from a different perspective, but a value add for them
Right.
being a part of the team and really feeling valued. It's not about should they leave, it's covering the key person risks that we've just talked about, but it's
Right.
more about valuing them as a key person in the business. And that's going to be hopefully something that's going to help from seeing a resignation down the road if there's
Right.
nothing.
Yeah, so that could be enhancing existing group plans or putting in place some products, whether they're insurance products or some type of individual pension plan or retirement compensation arrangement, or any of these things that are not really in the scope of what we're planning to talk to you about in the video, but in fact, I think are important to reference. So bringing it back to the insurance piece, because that's what we're here to talk about. Let's say we've identified outside of the founder, we've identified a key person. What would be next once we've identified that person and some level of dollar value that we want to put on it? Because you have to, I mean, you're not replacing the actual person, we're replacing some type of economic gap, right?
That's it. That's it. So I think it's, again, obviously there's a lot of conversation that has to go around it. It's not just a simple clear cut X dollar fixes everything. I think it's just of, we don't know if somebody gets sick or injured, how long they could be off for. So that's an unknown that won't be known until, unfortunately, it happens. But it's really just about,
it's really hard to predict. We don't have that, crystal ball, but we still need to make some reasonable guesstimates of, what, how we could fill that gap. Yeah.
Yeah, exactly. So again, it's like, it could be trying to determine what that value is, whether that's, the salary of the person, whether that's, again, a different valuation of what they bring to the table. And then what are you, the owner, plans for that time? Meaning that obviously, again, we don't know how long that person could be off for, but do we just want to protect it for 6 months? And that 6 months or that 1 year, right? And then it's like, okay, do we have enough money to bring in somebody to temporarily or figure out a way to replace this person until they come back? And maybe we need a bit more money because we want to hire somebody that's already at that level. Do we try to poach them from another company and so on? So again, there's not necessarily okay, let's look at it as a 1 times X value. It can be, don't get me wrong, but I like to bring it more towards, let's dive deeper into it. Let's talk more about this person, the what ifs, not to complicate anything, but the real value to that, right? And then we can really build out, well, what does that number look like if they got sick? So talk about critical illness insurance. Whether or not they have a group plan or not, what does that look like from a disability perspective? And then, of course, we've got the life insurance side of it. So if they are no longer on earth, and then, how does that come into play?
Right. So we call it, we talk about it as key person insurance, but really it's going back to those 3 core base types of products out there, and how do you combine them together in order to subsidize a gap that you really hard to predict through critical illness, disability, and life insurance, some kind of combination there.
That's right, exactly. And yeah, and again, I think that's where, if we think about some of the mistakes that I see is, and again, I feel that maybe it has to do with just thinking of it too much in the moment today versus the today and the future. We obviously don't expect or wish upon anybody to get sick, but again, it's like, if we think about a number today, well, is that number, and can that number align to the future, right? Making sure that we have those proper structures in place, and who's going to own it, and who's all of those more nitty-gritty we look at when we dive deep into it. But again, I think it's just about making sure that the amount that we're considering today is something that we can consider a valuable number down the road if that time were to come.
So key person planning in this particular sense, it's not about trying to predict the future, or we're really not hoping for tragedy, but we're trying to protect the value of the business. So if you'd like to chat about this in your situation, we invite you to reach out. You can contact me, Colleen O'Connell-Campbell, through my email, colleen.campbell@rbc.com. And just a reminder that all opinions expressed by me and any of my guests here on the YouTube videos are solely their own and do not reflect the opinion of RBC Dominion Securities. This video is for information purposes only. Before acting on anything you hear or see, consult a qualified professional. Insurance products are offered through RBC Wealth Management Financial Services, Inc., a subsidiary of RBC Dominion Securities, Inc. This content is produced with Canadian residents in the province of Ontario in mind, and I'm a wealth advisor with RBC Dominion Securities, a member of the Canadian Investor Protection Fund.